everyone, welcome back to the channel. Today I have a deep dive into a very popular Reddit AMA from a quantitative trader working at a prop firm in Chicago. He dished out an insane amount of advice on how to break into quantitative trading, what degrees to pursue, interview prep, compensation, lifestyle, and much more. So buckle in, we're going to walk through the entire AMA step by step, breaking down the best answers and insights he's shared. Jumping into segment 1, background and overview.
Who's that Pokemon?
Our guest of the day, also known as Deviant Deviation on Reddit, works in a prop trading firm, short for proprietary trading firm, in Chicago. Here's a quick rundown of his journey. He has an undergrad in computer engineering and a master's in statistics. As for his career, he's been a quant trader at a prop firm in Chicago since 2017. He's actively been answering questions about quant roles, how firms recruit, and what interviews are like, which degrees are valuable, and even day-to-day life. Moving on to the best degrees and educational paths for quant trading. A major theme of the Ask Me Anything is which degree is the best for breaking into quant trading. Let's walk through the main points. Point number 1, avoid most financial engineering masters. Most MFE programs are seen as cash cows. There's some exceptions such as CMU's computational finance masters, University of Chicago's financial maths, MIT's MFin. These are considered top tier, but many of them are seen as cash cows. The second point is there's a shift towards data science and machine learning. The entire industry is moving more towards data-driven and machine learning-based strategies. Traditional financial mathematics like Black-Scholes is not as heavily emphasized at the entry-level roles. Now, more onto recommended degrees. Pure math, physics, statistics, data science, or computer science. If you do choose to do a master's, aim for a top-tier school in a program that allows you to dive into rigorous math, stats, or machine learning. So any of those degrees listed in the first bullet are great for your undergrad. Now, comparing an undergrad and a PhD, you don't need a PhD to get into quant trading or even a research role. But if you want to do pure quant research like strategy research or advanced model building, a PhD definitely helps. Make sure to check out quantquestions.io, the #1 quant interview prep platform. There's hundreds of free questions, and there's even company playlists from top companies like Citadel, HRT, and Jane Street, so you can really optimize your prep for your next interview. Alright, now that we have education out of the way, let's move on to segment number 3, which is how to stand out and land interviews. Next up, the $1 million question. How do you get that first interview at a top trading firm? Now here's what Deviant Deviation said. About the recruiting process, many firms will automatically give you a timed math or logic test to STEM applicants. So some examples are Acuna Capital, IMC, SIG, and DRW. Now, what to study? First off, you gotta know your probability. That means Bayes rules, Markov chains, and expected value. Python and core Python libraries like Pandas, NumPy, even Polars now, which is like new library getting very popular. Linear algebra and general statistics knowledge. Lastly, some machine learning concepts, especially time series analysis. Now, this is all specific for a trader role. For a developer role, it would be different. Now, in terms of side projects, build personal trading algorithms covering topics like backtesting and analysis. Firms love to see that you've tried to apply your skills to real or simulated markets. In terms of math competitions, for top tier firms, performing well in these math contests can get you an interview, such as Putnam, AMC, AIME, HMMT, and PUMAC. Now, lastly, for the resumes and the interviews, focus on your actual problem-solving ability. You don't need deep financial knowledge for entry-level roles. Why trading is a common question. Make sure to have a good story behind it. Now, once you've landed that fat, juicy quant role, what you're worried about is your salary, compensation, and lifestyle. One of the most viewed parts about this AMA is the pay and lifestyle of a quant trader. So here are the highlights. First off, your first year compensation. OP started at $200K base, $50K sign-on, and a $50K guaranteed bonus totaling $300K in his first year. By a few years in, he was making $350K total, split between base and performance bonus. Now, your pay is extremely performance-based. Compensation can vary drastically from year to year. In a bad year, you might only get a tiny bonus, but in a great year, your bonus might beat your base salary. As for hours, which everyone worries about, It's roughly 45 to 50 hours a week, far fewer than certain roles like investment banking where you're working all the time. This comes at the trade-off of a much more volatile pay. In terms of job security and turnover, there's a huge eat what you kill mentality. You get paid based off your profit and loss, or P&L. If you underperform, turnover is high. In top trading firms, you're often replaced if your strategies are no longer making money. Now, an important thing to note is the difference between quant devs and quant traders. Quant dev roles have a lot more security and a lot more stable pay. Traders generally have a higher bonus potential, but a bigger risk of being let go. A major portion of the AMA was segment number 5, a comparison between MFE and Data Science Masters. So MFE is a Masters of Financial Engineering, as we mentioned before. So a lot of people ask, should I do an MFE or a Masters in Stats and Data Science? Here's a summary. MFEs can be great from a learning derivative pricing perspective, but the industry is shifting to heavily use ML or machine learning and statistical approaches. Masters in Data Science or Statistics is more flexible if you want to pivot out of finance, which you don't get with the MFE program. However, if you're aiming specifically to work at a top quant research role, and you can get into top schools like CMU, Comp Finance, UChicago FinMath, or MIT MFin, that's still a strong option. But outside of the top tier MFE programs, a generic financial engineering master's might not be as respected in the quant space. Now, what is the difference between high frequency trading, market making, and quant research? People like to use the umbrella term of quant to kind of lump everything together, but there are some distinctions. High frequency trading, usually using some low level language like C++, there's super low latency systems, and there's market making strategies with very short holding periods. Quant research, on the other hand, involves building statistical models, machine learning pipelines, and analyzing data for alpha signals. It could be medium or more long-term strategies. Lastly, Quant Trader has a hybrid of strategy design and execution. There's more emphasis on fast decision-making, game theory, and order book dynamics. Switching roles can happen, but it's not easy. Devs who want to jump to trading typically need strong math chops. Traders who shift to research need deeper modeling skills. Alright, next up we're going to segment number 7. We're going over frequently asked questions and fun extras. So these are just a whole bunch of spitfire questions asked to OP in the AMA. First question, what about age? Am I too old to start quant trading at 28 or 30? The answer to that was, age doesn't matter much. You will still be evaluated as an entry-level hire. The only difference is you won't get paid more just because you're older. Next question, what about non-competes? The answer to that was, many top firms have strict non-competes. If you leave or are let go, it can be harder to pivot directly to another trading firm, which is why some go into tech or data science roles instead. Next up, is quant trading going away? According to OP, absolutely not. Markets aren't disappearing anytime soon. The skill sets are portable to other advanced data science roles, but once you're specialized, it can be tough to rebrand. Last question, I want to do discretionary day trading with diploma. Should I do that? The OP strongly advises against that path. Real quant funds are a safer and more reliable route if you have strong in math programming skills compared to day trading on your own. So, there you have it, the ultimate crash course from an actual quant trader who graciously answered a ton of Reddit questions. The key takeaways are, when it comes to degrees, focus on STEM fundamentals. That means math, stats, CS, physics, and data science. Next up is build personal projects or do research that show your data analysis and trading interests. Next up is sharpen your probability and expected value problem solving skills for the interviews because you're going to need it, and Quant Questions IO is a great resource to get those skills leveled up. And don't rely heavily on the derivative pricing or deep finance theory for entry-level roles. Stick to your core quantitative skills first. And lastly, the compensation can be great, but job security depends on continuous performance. Now, if you found this breakdown valuable, hit that like button, subscribe for more deep dives into quant finance and other data-driven careers, and drop a comment below with any questions or topic requests. Thanks for watching, and I'll see you guys in the next video.